Okay, I think we're live this time, for real. Hopefully, are we? I can't even tell.
Yeah, you're on. It's got a
Yeah, I just got a notification.
All right, there we go. Sorry about that, guys. The OBS studio went and rug pulled us.
Yep, says you're live.
Sweet. Welcome, everybody. It's been a really long time. Very glad to be back here. See, is there any way that I can speed up the stream? Because there's a lot of latency on the stream right now.
You're streaming on YouTube, aren't you?
I am streaming on YouTube, and your voice is coming through, so you get to be on YouTube too.
All right, class, say hey for YouTube.
Are you serious? Are you actually teaching a class?
Yes, he was hot micing earlier, telling people about their grades.
Class, yes.
Oh man, that's hilarious. All right, well, hello class. Today we're going to learn how to profit from meme stocks, starting with the original meme stock,
guys,
the S&P 500.
Hey guys, I actually told them they could listen, but I'm afraid of y'all cussing. So if y'all could like watch a language, we could have an entire class listen to y'all and learn about the stock market.
Ooh.
We will be on our best behavior.
All right.
Hey,
Well,
if you
I
could
try to
do
make
me
them.
that, I'm about to put you on the big screen.
All right.
Ooh.
All right. This is a live stream. Wow, this is getting to be wow, now I feel like I'm really putting on a show. Not only just live streaming to YouTube, but now I'm putting on a show for what is this, a college class or high school? What are we doing?
7th grade life science.
Ooh.
7th grade life science. I remember studying the stock market in 7th grade with my history teacher. I don't know why he decided to do this, but he had us open up an Ally paper trading account or E-Trade, something like that. And we started learning how to play the stock market just with investing in paper trading account. And somebody in my class took a $1 million starting account, put every single dollar of it into a single options contract for the market starting the next day, and he closed in a 1,000% profit the next day. And he's like, "Okay, I'm done."
But that was sneaky trading, right?
All right. Well, I guess it's a good time to get started by watching The Spy. First of all, how's everybody doing today over in YouTube land? Let me get some cactuses in chat. Been looking forward to getting back to streaming schedule. I don't know if I'll be able to stick to a consistent schedule. I'm really trying, but thankfully, I've got at least today to cover what's been going on in the market. So, yeah, we'll get started. So first things first, we had a really interesting move in the SPY today. We were watching for this double top formation, which you can see here. The market played this one out pretty perfectly, and we closed the day yesterday about halfway up the double top. Now, classic double tops, you'll establish a top, and then you'll break to the downside, and then you'll retrace, do like a 38 or a 50% retracement, which is exactly what this was, and then see a rejection and continuation to the downside, which is usually equal to this move. So you would see another, whoops. So you would see another move to the downside after it breaks to the downside here. So we should have seen, or we would have expected to see, around $360 on the S&P. Instead, well, the SPY, being the meme stock that it is, decided to go in the absolute opposite direction. Hopefully, people that were able to see this coming were able to profit off of it. But if you didn't, hopefully you still saw this saw this move as an opportunity to average down on put positions, because as you can see right now, we're now forming a classic triple top pattern where we have a slightly weaker third top and a tweezer top as well. So these two candles right here at the top on the 5 minute form a tweezer. You would normally see a tiny wick at the top of this red candle. That's why it looks like a little tweezer. So this is a 2 candle top pattern where we see a reversal to the downside coming. And in addition to that, we're now forming a head and shoulders. This is another pattern. Now, these typically come in measured moves. So we have a large move to the upside. That's our first shoulder, and then a retracement. It's usually a 38 or a 40% retracement. And then we create a new higher high as the head, and then return to the same or very close to the same low. Now we would expect the final right shoulder to come up to the same or just below the level of the right shoulder before breaking to the downside. But what is the psychology of this? Essentially, what we're looking at is the market is trying to attempt to break up to a new level of support, but fails. And then when it tries to recapture that same level of support, it fails to recapture a previous level of support. So this entire game of technical analysis is looking for support resistance levels. And we see the first one here. When it gets rejected, it manages to capture it and then take a new level, but then fails to take that level and also fails to maintain support at that same level and breaks back to a previous level of established support. And then when it tries to recapture the level that it took the first move, then it breaks down and fails once again. Now this one is probably going to be a similar strength move, but sometimes you might see these offset a little bit, like you might see a weaker shoulder where they're slanting to the downside like this. This is also classified as a head and shoulders pattern. So the other thing that I was watching for on this move also was this rising wedge or an ascending wedge. Ascending wedges are another type of bearish pattern where you see a price consolidating to the upside. And what is classic of ascending wedges is decreasing volume. So if you look at the volume chart, you see that as the SPY is rising, the volume chart is continuously getting lower and lower and lower and lower. Rising price and lowering volume is a bearish indicator. So what you do is you look for a consolidation. In this case, the rising wedge shows if you draw along the tops of the wicks on the upside and then the bottom wicks on the downside, then you can see that the price starts to consolidate into a tighter move to the upside until eventually it breaks through the bottom of the ascending wedge. And on this candle is where you enter into a short position, this red candle right here. Now, I like to trade on the 15-minute chart. I'm not a day trader. I'm more of a swing trader. So I trade on the 15-minute chart and I check for trends on the 1 hour. But this is something that you can do. And this works on any time frame. My argument for using 15-minute charts is that it's much less stressful. I like to trade on 15-minute charts because usually I'm holding my trades for several days instead of several minutes or hours. And I don't have to be constantly watching the charts because, I work for a living. I do this for fun. Okay. Now we're starting to see a little bit of support here. You can see this long wick on a red candle, and now we're starting to get an engulfing green candle. So if you go back to the 5-minute chart, we're waiting to see if we do end up topping out at the top of this head and shoulders pattern. Oh, this is actually a good example of a dragonfly candle. You don't see these too often, but this is a dragonfly candle right here. Dragonfly candles can be bullish or bearish, but they basically open flat and then they have a very long wick from one side to either the upside or the downside. If it's a long wick to the downside, then this is essentially a reversal candle to the upside. This is a bullish candle. And if you had gotten in after this candle had closed, you would have gotten in at around $368 and maybe 63 cents. And you could ride that move. I like to play for a 2-to-1 risk to reward ratio. So you set your stop loss at the bottom of this candle, and then I just go for a flat 2-to-1 risk reward ratio. So I didn't catch this move, but if you were trading this, then this would be your entry, and you would wait to take profit at this level. And since I'm using TradingView, I can do this. I can set it to do this automatically when I see things like this. But even on a 5-minute trade, this is actually like a really good setup because I've got a couple of other things going in my favor. For one, I see the RSI was bouncing off of the 50 level here. I got this really bullish candle that shows a strong reversal pattern. And I can see that the MACD has been red for a while, but it's still in the positive end. It's above the 0 or the midline. And because of that, if the MACD starts turning around, this is kind of front running the trade just a little bit. But had I seen just this one candlestick, this would have been enough for me to jump into just a really quick scalp. A lot of people that scalp trades like this, they look for these types of candlestick patterns. The same way that I pointed out this tweezer top, somebody would see this and they would enter the same type of position. They would enter in on the close of this candle, set their stop loss really tight, just above the tops of these candles, and then do a 2-to-1 risk reward ratio. And you would have gotten filled right here on this candlestick right here. That would have been literally a 15-minute trade, and you would have gotten twice your money back. So whatever you bet on it, you would get twice back. I find that 2-to-1 risk reward is a nice happy medium. That's just about right. You guys feel free to ask me any questions. Alakazam, you can have your class ask questions too. This is kind of fun. I feel like I'm actually teaching something.
Well, you do every day.
Thanks,
Every
Chef.
day you're in here, we hear you. You teach us.
Thanks, Chef. I appreciate that. Now, since I'm not doing day trading, because I find that day trading is entirely too stressful, I'm actually looking to go short on this entire pattern. Now, after seeing this ascending wedge play out, I'm going to kind of adjust it just a little bit because I want to be conservative. But this looks pretty close to rejection to me. So, and the volume is getting weaker. What's that, my dude?
My class does have a few questions, but they're pretty basic.
All right, let's hear them.
How old do you have to be to invest?
You can invest at any age. You don't have to be of a certain age, but if you're under 18, you probably have to get approved through your parents. Most likely, you have to ask your mom or your dad to open up an account for you, and you'll probably want to have them watch your investments for a while. And above all else, one thing that I would strongly recommend is don't play with real money when you're just starting out. You should, if you're considering doing this type of thing, maybe as a career or just to grow your wealth from the time that you're young, because when you start young, that gives you the greatest opportunity for success, because over the long term, the stock market goes up. The stock market always goes up over the long term. So the longer you hold, there's a saying in stock trading, time in the market beats timing the market. And every day trader is always trying to time the market because they're trying to grow their money quickly, and they're trying to do it over time. But you'll notice I was born back before this chart even starts. Actually, I was born before this chart even starts. And if I had invested $1,000, let's say I invested $1,000, and we'll just put it right back here.
Hey, TD, real quick.
Yeah, let's go ahead. What's up?
Just for the kids, if they are interested in that, the type of account your parents need to look at is called a custodial account.
Yes,
So you
thank
need to
you.
look for a brokerage that has that. TD Ameritrade has them. I have one for my son.
How much money would I get if I invested $50?
If you invested $50,
Yeah.
all right. When were you born? What year were you born?
2010.
2010. Oh my God. I was graduating high school when you were born. Oh no. Now I feel old, man. All right, 2010. We'll just go with January. I don't know what month, but it doesn't matter. We'll start with January. All right. And let's just start right here. If you had invested $50 and you exited at the very tippy top of the market that we just had, because our market just collapsed, or it's starting to at least. If you had invested $50,
Okay. We've got another question.
hold on. We're gonna answer this question first.
Do you have a question?
Any other questions, y'all? Any other questions about the stock market?
We're gonna have to mute them, maybe.
All right, they're done with questions. Hey, thank y'all so much. That made them really happy. Hopefully, that encourages them to get into it. I appreciate that a whole lot.
Yeah, no problem. All right. We'll try this. All right. So you would have had to, let's see, $50. $50, and if you got out of the market at $440, then you would have made, if you had invested, it would have been actually $59. Would have been $59, but that would have come to $473.76. So for every $50 that you had put into the stock market, if you had put it into this fund, this is called the S&P 500 ETF Trust, or the SPY, this would have turned your $50 into over $430. When you think about that, it's been...
Hey, by the way, that class had to leave. It's the next period,
Okay.
so they're gone. But I gave them the link to the YouTube channel so they can hear the rest of it later.
All right, that's cool. All right. I'll be looking forward to hearing their comments. We're teaching middle schoolers how to become degenerates too.
Yeah, and they all had their Chromebooks out, so they all had to go look and subscribe to you. So you might have got a lot of young followers there.
That's pretty neat. That is very cool. Thank you.
Yeah, no problem. Thank you. My next class is starting. I'll be back in about 15 minutes.
All right.
We'll have a next round of questions.
We're having another round. All right. You know what? This is actually making this even more fun than I expected. This is a
Awesome.
interesting change for the
I'll
day.
ask them if they have any questions, and if they do, we'll be back in about 20-30 minutes if we're still on.
Right on. All right. Okay. So let's catch up with the market trend at the moment. See where we're currently at. It looks like that trade is going to fail. Oh, maybe not. We'll see. I'm expecting this thing to be, this is a really tight trade. If this actually hits, I'll be very surprised. How about you guys on YouTube? You guys got any questions? You guys want to know anything? What can I tell you? Oh, hey, thanks, Dr. DFace. Thanks for the update. So, the settlement for BBIG has officially been reached. The money is being returned to Vinco to the tune of $4 million. The judge is 10,000% for retailers, according to Hugh Tran the Man from Twitter, and all the crooks have gone. So the last member of the Vinco team has voluntarily resigned. Now the work can begin. Now things can actually start moving in the right direction. So I'm really happy to see that. Man, it's been a long wait for BBIG. Let's actually go catch up with BBIG before we move back over to the market. We're watching a few other trades play out right now. So BBIG is pushing 99.5 cents.
Hey, True Demon, we got a question when you're ready.
Let's hear it.
First, the class wants to say, hey. Come on, class.
Man, this is awesome.
Be big at $1.
All right. It's crossing
Okay,
a
you got a
dollar.
question?
Let's see it.
Go ahead.
When I first invest into the stock market, do I put a small amount of money in continuously or put a large amount of money in at once?
So there's two there. You could do it both ways, but the idea with the stock market is that you want to use it as an investment vehicle over the long term. This is generally true. When you're investing, or when you start investing, you, especially if you're young, you can be very aggressive because you're starting with a small amount of money and you have a long life ahead of you. So the philosophy of investing is that you want to put your money in consistently and keep adding to your portfolio over time. You can start with a large amount of money, or you can start very small. You can even start right now with something like an Acorns account. If you've ever heard of Acorns or change investing, there's an app called Acorns where you can invest spare change. Like if your parents give you a credit card or something like that, it works by every time you get charged for something, you pay, say you buy a pack of bubble gum for 60 cents or something. It'll round up to $1, and that 40 cents gets added to your portfolio, and they'll invest it for you. Something like that. And I started with a very small account. I only put $500 in it when I was 18. And then by the time that I was 24, that had grown to $18,000 because of just me using spare change and investing very slowly over time. And that account had a growth of over $6,000. So $12,000 of that was just my money putting into it, but the other $6,000 was from the growth of the investments. So you can do it both ways, but the idea is you want to keep adding to it over time.
Or as I like to call it, free money.
Free money. The biggest lesson in the stock market, especially when it comes to investing, is that patience is key. Let me hear everybody say it. Patience is key.
Tightly. What is it? Patience is key.
This is so cool. I've never taught a class before, but man, I feel like a natural.
Hey, you're doing a great job. It's like you're here. Everyone can hear you clearly. Hey, does anyone else have another question before we continue class today? No more? Hey, True Demon, thank you so much for your help. Have a good stream. I'm out.
Pleasure was all mine. Y'all have a good day. Say no to FOMO. That's another good lesson.
That's a catchy one. I like that.
Say no to FOMO. That one's from Chris B.
That's a t-shirt.
Hey, Brian. So I don't think that BBIG is getting pinned anymore, or at least if it is, it probably isn't going to stay there for too long. At the moment, though, BBIG's biggest problem is just lack of volume. So I wouldn't necessarily say it's pinning so much as just lack of buy pressure. One of the big problems that I've noticed with all of these meme stocks is that there's not enough people buying actual shares. There's a lot of people playing options.
The level 2s on BBIG at $1, $1, $2, and $3 are all over 10K. So they got a huge sell wall holding it.
Okay, I take it back. They're pinning it at $1. Man, they do not want to see this thing crack $1 by today, because if they do, then it'll be available for exercise. People start exercising their calls, and then they have to go out and buy shares, and they don't like that.
Yeah, there's also 156,000 at $1.25, and then 106,000 at $1.30.
Hello. All right, let's go take a look at the SPY again. All right, we're starting to see the trade breakdown. So I would have exited at this point because I would know that I'm wrong and I can get out with only a small loss. This one has turned around pretty quickly. We got a clear tweezer top, and now it's basically time to enter into short positions. This is, let's see. I would be setting myself up for a stop at the top of this wedge, and I'm going to play it to the downside for the whole wedge. So this is actually a 4-to-1 risk-reward ratio. I like that, actually. That's a really good setup. Do I have my paper trading account on? Yes, I do. All right, here we go. We'll go for a $500 risk, which is... Nah, let's live a little. We'll do 1,000. We're going to risk 1.5 of my portfolio. And let's go. I don't follow this trade. This is a paper trading account for those that are watching. I am growing this. I am trying to trade this like it's real money, but for this purpose of the stream, this is only a paper trading account. This is not real money that I'm betting here. Purely for educational and informational purposes. Anyway, that being said, I really like the setup for this trade in particular. So what I'm trading currently is SPY has been on an absolute tear. And thank you, shout out to JRuff, one of the mods from Hell's Trading Floor, for calling this out to the Discord and pointing out the price levels. It hit your price level exactly, 370 on this tweezer top. I really couldn't freaking believe it. Oh, it came in. Oh, it did. It did. It hit exactly on the green candle, and then it opened just 1 cent below and closed down. So, anyway, this now basically completes a head and shoulders pattern on. Oh my God, I can't draw anything. So we've got our head and shoulders. We've got our neckline, which is just about to break, and as soon as we see that, we can expect at the very least a move to the downside to this level. We'll do our first take profit at $366.50. So I'll go ahead and mark that out.
One thing to watch out for on this guy is they love to have multiple patterns that they can flip. So we do absolutely have a head and shoulders here, which traditionally break down, but we also have a potential bullish pennant if it hits above 369 again. So I'm using the shoulders, that shoulder line from the left shoulder to the right shoulder as a resistance point, and I'm looking for a rejection off of that. If it makes it past that with volume, we could see a little bit of a pop. I think one of the catalysts that might bring that is if bond rates continue to go down into the close of the day. That's going to free up money for investors to kind of move into the market. And the SPY is sitting close to the gap fill at 370.40 up to 374-ish. So it could go either way here.
I do suppose that it could go either way. The one thing that really discourages the idea of a large move to the upside for me is just that the SPY is currently trading in an uptrend short term with very little volume, and it's ever decreasing volume, consistently decreasing volume. So that's part of my reason for my bearishness, is just seeing how little volume there is.
I think Apple is either going to be the make or break. It keeps coming up and toying with entering the gap that it made last night because it's down quite a bit. And being the heaviest weighted stock in the market, that could be potential enough to pull it up. But if it gets rejected here, I can see it going down.
Okay, so I just added another $100 of risk to my position since it was going, since the price was going up, and I got a little bit better fill. This is just averaging down on my position a little bit. I am doubling down. Once again, this is not real money. We're playing with paper trading. It's definitely bigger than most of the risks that I take, but since it's since this is in celebration of our first stream in a long time, is the Netflix rally a good short opportunity? That's an excellent question.
That's one of the biggest movers of the day right there.
Yeah, it's probably responsible for a good deal of the move to the upside on the SPY.
Yeah.
The one thing that
upgrade last night.
let me go pull this up on the 15-minute and see where we're at. Okay. All right. So we did have a very high volume pop. It was a big move, but at the moment I would probably stay out of Netflix's way and wait to see how it reacts to this level here at the previous resistance that it wasn't able to get above back on the 20th. So the reason for this move is that Netflix received a equities upgrade. Their Atlantic Equities upgraded the company's stock to overweight from neutral and lifted its price target to 283 from 211. So I'm not sure why they suddenly flipped like that, but the market loves it. What do I think about going inverse with UVIXI? What do you mean by going inverse? Just making sure I'm understanding. So Netflix, I maintain should probably stay out of its way. So what's eaten me with the VIX is that we have had two higher highs, and we did close above its previous resistance line. Now what I'm waiting for is for the VIX to close a higher low on this ascending level of support. So this yellow line is what I'm paying attention to now to see if VIX is going to close higher and keep moving to the upside. Because if this is the lower band of VIX on its move to the upside, then what we can expect to see is for volatility to increase, insurance and put premiums going up ahead of the market move to the downside. Okay, so HYG. This is another one that we watch very closely. So HYG is bull flagging pretty hard. We've got these two moves here. And we are now trading above the 50-period moving average for the first time since the 21st of September on the 30-minute chart.
Ooh, Apple is rallying and pushing into the gap.
Is it really?
It's trying to under some volume too.
Man, everybody just wants to keep buying up Apple. It's honestly a little bit frustrating. Apple's the only thing that's holding up the SPY anymore. Apple and Tesla, they're the only things holding the SPY up.
So big.
It's so ridiculous.
All right, we're testing that 369.50. Oh, look at that. BBIG broke over $1. It's out of the wedge.
Thoughts on ABCT? Honestly, I didn't really like it. I wasn't that crazy on the financial situation of the company, and I don't think that the buyout is viable. The idea that they're going to be bought out by Microsoft didn't really make sense to me. And it doesn't mean that I don't care that much. You know, I could be wrong, but when I look at the situation that they're in financially, and I see that they're about to be delisted, even if Microsoft wanted to buy them, they would just do it after they delisted. They could make a deal with them behind closed doors. There's no reason for them to have to do it now while they're trading in the open market. They can just wait for the company to go OTC, and then make a deal with the executive team. They don't have to. They don't have to buy it right here, right now. It's a nice rumor and all, and obviously it has some weight. I mean, the stock moved 100% from 1 week to the next. That's not something to turn your nose up at. That's good money right there. But to me, it's not a risk worth taking. So that's where I stand on ABCT. Wow. This is what I say about the SPY being a meme stock.
Yeah, Apple's at new intraday highs, 148.66.
Wow.
Is Apple entering that gap fill?
It is officially in the gap.
Jimmy looks like it wants to break. Getting ready to test a new intraday high.
I believe Jimmy actually did. It's at 27.03.
I'm showing 27.09 at that candle at 10:55. 5-minute candle. Got up to 27.09er.
Hey, Lazeman, congratulations on the win. The Apple drop was definitely unexpected, but it was a nice play. I gotta say, it was a really nice play. The puts overnight were excellent. I don't know if I would have done. I certainly wouldn't have done September 30th. That's way too close for me. But I'm glad that you got. I hope you took your profit, and I'm glad to see that you made a big win. That's an excellent win. 4,000 overnight. Jeez. This candle doesn't make any sense. It's even smaller volume than all the others that have traded all day long. What is happening? I'm going to do something that nobody should ever do. I'm going to move my stop and I'm going to average down. I am going to move my stop and average down. This is not something that anyone should ever do on their trades.
That's why this is a paper trading account. Once
Yes.
again, this is not real money.
Yes, this is a paper trading account. I'm going to move my stop up to here. And I'm going to average down on my cost basis. It looks like I've already missed the rejection. Okay. Okay, I've fixed the profile of my paper trade here. So now it's become a 5.8 to 1 risk to reward ratio, which, to be fair, has a very tight stop loss. Oh my god. Real Tony Smith. That gif's hilarious. That's from Buffy the Vampire Slayer, isn't it? Yeah, Anya from Buffy. Man, I love that show. I watched that for the first time with my wife a few months ago. Actually, it took us almost a year to get through the entire series. I gotta say, I am now a big fan of the Buffyverse. Buffy the Vampire Slayer is an awesome show. I don't know how I didn't get into that when I was a kid. Somehow missed out on some of the good times. All right. So this candle's wicking down really hard. Like, we're seeing some serious rejection from the SPY. I probably didn't even need to move my stop loss, but I just decided to, just in case there was a volatility pop. But with this huge move back up towards 370, I was thinking, like, you know what? I'd rather just average down and stay in the trade. And now, if it keeps going this way, all right, now we're getting somewhere. Now we're getting somewhere. It looks like we're gonna close on either a Dragonfly or a Tombstone Candle on the 30-minute. Oh, also on the 15-minute. You want to talk about some indecision? That was a lot of volume compared to like 2 candles ago on the 15-minute chart. Even on the 5-minute, this is quite a lot compared to what we were doing just like an hour before. Yeah. Yeah, we've 2-topped. This is it. We got a drop. We've got a lowering. We got a lowering drop. Okay, or a lowering top. So I was very early on my entry, unfortunately. But I'm now much more confident in this trade. I was thinking to myself, like, man, there's no way we're gonna crack through 370, is there? But who knows? Knowing my luck, we'll close the day low, and then all of a sudden, SPY will gap up in the morning, and it'll stop me out of the trade. And then it'll start taking off to the downside. You know, whatever. Who cares? It's only monopoly money. I do have real money riding on the SPY going down, but the length on those puts puts me pretty far away from expiration, so I'm not all that concerned. What is going on? All right. Let's go check out what the 2-year bonds are doing. They're still dropping, but I think that we're about to see it bottom here. We completed this bear flag on the 2-year chart. Now the only question is, do we complete this pennant? Nope. I think we bounce. I think we bounce and the bonds start going back up again. We'll see. But I think we see the bonds start going back up. HYG is starting to curl downward now. This is what I watch basically to decide what direction SPY is going to go. As long as SPY and HYG are moving in the same direction and agreeing with each other, then all's good in the neighborhood. But when HYG starts to go and diverge from the SPY, like the SPY is still going up while HYG turns around and starts heading to the downside, that's when I know that HYG and the bond traders know that something is up. Okay, let's see. I have another paper trade on the Qs. I entered at the top of, about halfway up this candle. There had been a really tall wick on this. So I was thinking that this trade was going to turn around to the downside pretty quickly. It did for a little while, but I've got my take profit like way out here. I should probably tighten this up a little bit, but I wanted to leave myself plenty of room for this stop just in case we filled this gap. Security alert for U.S. citizens in Russia. Oh boy. What do we got going on now?
Well, the embassy says if you plan on traveling there, don't go. It also says that if you have dual citizenship, try to leave as quickly as possible because you're most likely going to get conscripted.
Oh boy.
Big candle.
All right, that's definitely of significant concern.
Oh,
Oh,
yeah,
boy.
B-Big broke through all those walls. Oh, got one more at a $1.03 at 11. Oh, 20,000. They just upped it to.
This is this is some big news. Oh, let me turn my clock back on. I've had my clock off all this time. All right, we're at 2:49.
About 10 minutes till power hour.
All right. So before we start Power Hour, this is actually some rather serious news. Security alert for U.S. citizens in Russia. U.S. Embassy, Moscow, Russia, September 27th, 2022. On September 21st, the Russian government began a mobilization of its citizens to armed forces in support of its invasion of Ukraine. This is essentially conscription. Russia may refuse to acknowledge dual nationals' U.S. citizenship, deny their access to U.S. consular assistance, prevent their departure from Russia, and conscript dual nationals for military service. Commercial flight options are extremely limited at present and are often unavailable on short notice. Overland routes by car and bus are still open. If you wish to depart Russia, you should make independent arrangements as soon as possible. U.S. Embassy has severe limitations on its ability to assist U.S. citizens, and conditions, including transportation options, may suddenly become even more limited. U.S. citizens should not travel to Russia, and those residing or traveling in Russia should depart Russia immediately while limited commercial travel options remain. The Department of State provides information on commercial travel in the Information of U.S. Citizens in Russia Travel Options Out of Russia page on travel.state.gov. This site also provides information on requirements for entering neighboring countries, procedures for travel on expired U.S. passports in some circumstances, and visa requirements for families with American and Russian citizen family members. We remind U.S. citizens that the right to peacefully assemble and freedom of expression are not guaranteed in Russia. Avoid all political or social protests and do not photograph security personnel at these events. Russian authorities have arrested U.S. citizens who've participated in demonstrations. This is actually quite serious. This is kind of an escalation to what's going on in Ukraine. So yeah, if Moscow is now talking, if this is a legitimate concern that Moscow is going to start shanghaiing dual citizens and bringing them in as conscripts of the Russian military, then yeah, this is a problem. General Disarray, thank you for the $2, my dude. I really appreciate that, man. And Boomer Assassin, thank you for the $2 as well. I sorry that I missed that earlier. I forgot to give you a shout out.
It's also interesting to note that we just gave Biden just gave the Ukraine a big pile of money without Congress's approval.
Oh boy. Oh boy. Oh boy. I don't like it, guys. I don't like it. Yo, if we go to war with Russia and NATO has to get involved, man, this is not going to be good. All right.
All right. 2-year bonds just broke lows.
Did it really? Man, I'm so shocked.
410 and the 10 years just hit 3.713. Apple is testing 149. Oh, there it is.
BBIG's at $1.04.
Here comes
Looks
the
like Apple is
SPY.
going to fill that gap.
SPY really needs to get over 370.40 to make a big move.
Let's see. BBIG options flow. I see someone asking for it. Most of the options flow, especially from floor traders, is very bearish. Selling of $1 calls for April 2023. So most of the big traders on Wall Street are selling calls and buying puts. There's all kinds of bearish sentiment on the options market. Basically, everything that's over $5,000 trades are bearish today. The total flow on visible alerts is very bullish, but most of these are triggered by repeated retail purchases going back several weeks ago, like right around the 12th of September. That's where most of these alerts came from. The actual weekly volume is pretty much all puts.
The Bank of England has canceled their speech on balance sheet reduction for the 29th.
Are they giving up?
I don't know, man. I just saw it come across. I didn't know if maybe the market's looking at something we hadn't seen yet.
Be big 105.
Yeah, the more that the SPY pushes, the more suspicious I get. The more it keeps pushing, the more suspicious I get. It's not making any sense. We have low volume. We have very low volume. The moves that we had. Oh,
Now, didn't England not too long ago cancel the other speech because did they ever redo that the rate thing? I believe England was going to do because the Queen died. Because remember they canceled the hike and they put a moratorium on it, but I don't know. I never followed through and saw if it actually they did anything or if they still are holding it off and now they're holding another one off.
You know, I don't know. Wow, Apple. Wow.
What got canceled? There's a Fed thing that got canceled for tomorrow.
No,
No,
the Bank of England.
Oh, I accidentally, by the way, I got to tell you, I accidentally stumbled into a Bank of England talk, and somebody, I need to confirm more on it, but somebody on the financial channel was talking about they might or should have an emergency meeting for a 100-point hike before their normal meeting in November for maybe if UK is UK England's in UK, or am I stupid?
Yeah, no, you're perfectly, and that makes that
Wait.
just backs up what I was just saying, where when the Queen died, they canceled the rate hike because of her death and put a moratorium on it, and then now you're saying they're having an emergency meeting to do a rate hike. That makes perfect sense.
They might. I was so tired and I accidentally stumbled in and I only got the tail end of it and I didn't see who was speaking. And when he said that, they cut him off. They shut him down and they said, "Okay, we're done with you," and just stopped. And they just took him off the air.
Wow.
So I don't know who that was. They completely shut him down and just went on to the next thing like he wasn't even there anymore.
Okay. That's
So I don't know what's going to happen. We should investigate that, is what I'm saying, because I accidentally stumbled into that this morning when I was looking for the video.
Well, I know
And
earlier
I-
this morning too, the UK was buying up bonds, so they turned the printers back on, so they're printing money.
oh my god.
And at 11:30 was when the European market closes, and that's when we're looking to the 10 and the 2-year bonds to see if they popped or flopped. And they came in and they juked like they were about to make a move north, but then got a hard rejection off the fib lines and moved south and are now making new lows. So the idea there was there's a lot of money freeing up to flow into the markets for a short-term rally. But I wonder if that has anything to do with the postponement of the meeting.
Well, if the UK starts to turn on their printers, then traders here in the US are going to expect our central bank to follow suit. That's a bit concerning. Yeah, Persephone, don't okay. Sorry, I lost my train of thought, but you're good. You didn't mess anything up.
You're good. That was
All
good.
good.
That was a good info drop.
Yeah, I was actually really appreciative of the info drop. The rate hike decision on the UK is actually going to affect us a lot more than people might think. If the central banks in the United Kingdom decide to start printing bonds and trying to turn the money printer back on again, then this would essentially be the start of flip-flops in foreign markets. That's going to deflate our currency. And it's going to actually put pressure on our central banks to do the same thing because they'll feel a little bit safer. And maybe they might actually start reducing the number of rate hikes and may not actually do the full 125 points between now and the end of the year, which would be bad. I think that would be the wrong decision, but maybe they'll stick to their guns and they'll keep the rate hikes going. But for right now, if that speculation proves true that the UK is going to flip-flop on their stance, then that will probably put some buying pressure into the stock market because of traders anticipating our bank doing the same thing. Even if they don't make that decision, the stock market will anticipate it.
We are in Power Hour.
Man, Apple pisses me off. I've just been wanting to short it for so long, and it just won't go my direction.
Here goes
It
the
started
SPY
today. It started today, and then it just like gave up the ghost, man. SPY is still going up on lowering volume.
Yeah, why not?
I cannot even. I really cannot even.
They've
Dude.
really been pushing this buy the dip narrative, though, so maybe it's just retail trying to buy the dip.
Right before the rug pull.
I'm wondering. They're doing the same thing with houses and stuff.
I'm not getting stopped out of this trade. I refuse. Don't do this. Don't do what I'm doing on my screen, okay? You're not seeing this, but don't. This is a fucking rug pull waiting to happen. I am not getting stopped out of this trade. I know I'm right. The SPY is lying to everybody right now. I'm not going to be forced to buy out of my shorts. I don't care if it's a paper trade. I don't care if you call me emotional. The SPY is wrong right now.
Apple at 149.15.
Watch this rug pull of the century happen in Power Hour. Oh man. It'll go my direction next week. You're probably right. You're probably right.
There it goes. 370, 30. Here's the
Don't
make or
you
break
fucking
right
do
here.
it.
Break, break.
All right.
Did anybody else hear logical flip a table somewhere?
Nah, I'm good. I'm just sitting here watching the bullshit.
It is
Secretly
it,
being
it is
dragged as-
it is freaking crazy. I'm gonna adjust this slightly.
Whatever. Everybody can have their little pop. And we're gonna see 340 before anything happens. Foreign banks are gonna freaking print us into more inflation. Dumbasses.
Oh, they wanted to. Freaking Californian state government wanted to give everybody an inflation relief check.
Yeah.
Because that makes perfect fucking sense.
Well, we're talking about
What
it in
in the-
Michigan as well. Where well, Michigan currently has a budget surplus. I believe California does as well, and I think Michigan's talking about giving back its citizens. I want to say it's like a $500 check or something.
Yeah, that's just stupid.
So they're gonna cure blood loss by bloodletting? I don't.
Yep.
Yeah, that's that's a good description. That's exactly what they're planning to do.
Bring in the leeches.
Well, no, see, if you cut yourself down on the lower part of your arm, all you got to do is cut yourself on the upper part of the arm, and then you'll stop bleeding down on the lower part.
Why do you think the
Makes
Fed
sense.
keeps walking into the room, dropping its fucking cock on the table? Like they're sick of
And
it.
it's
We
gone.
still recording?
We're still recording.
Ugh, my bad. But
It's all good.
they're sick of it. Like they're sick of this crap. Like they walk in and they're like, dude, you guys aren't listening. Inflation is a
Boom.
problem. We're trying to
376,
combat it.
Spies
And
moving.
Biden and local governments are like, you're right, we agree, inflation's a problem. Let's give out money in order to get people through it. And the Fed's like, what? Like it's like you idiots aren't listening.
Nope, moving my stop again. I don't care. This is a paper count. I don't give a damn. I'm not getting stopped out of the trade. As a matter of fact, I'm taking the stop away. Something that no trader should ever do. No trader should ever take away their stop loss. Let me say this very clearly. You should never, ever, ever take away your stop loss. You should take your stops. You should not do what I'm doing. This is a bad habit. But this right here is a rug pull waiting to happen. I'm not getting stopped out of this trade.
You can't take away a stop loss if you never put one in.
This move is profoundly sketchy.
I mean,
Profoundly
Target is
sketchy.
around 373.50.
It correlates with everything else that we're seeing right now, though, with the bonds dropping. Dixie went through the floor. Like, it correlates to everything. I think the entire move is garbage.
So this ascending wedge that I had charted has now become a bear channel. We don't know when it will end. They might fill the gap to 375. If the SPY does fill to 375, I will flip a table.
I mean, it could. That was what I was calling for. Was if it entered the gap, I'm expecting it to try and to gap fill and then reject. I thought the bounce today was only going to be to 370. I didn't see it having enough to get here, but I guess, foreign banks and everybody's deciding to make their own policies that I guess inflation's over. We don't have to worry about it anymore. Everybody turn the printers back on. Let's get out of this thing.
Right.
So stupid. They're gonna force it to 300 if people jump on that chip.
If they turn the printers back on and they pump the market one more fucking time, then we'll go to 400 and then we'll be going straight back down to 2.
Yeah. They'll turn the printers back
200.
on. Inflation, all the numbers will go through the roof, and they'll Volcker us.
Hey, Walt Travaria, thank you very much for the $7. Thank you very much, dude. I really appreciate that. Says thanks, TXD and Hell's Trading Floor. I assume you mean True X Demon. You can just call me TD or True Demon, whatever works for you. I know that this is entering the gap, but like, holy shit, are we really gonna fill this gap? Are we really gonna fill this gap right now?
Yes, sir.
All right.
Now I'm wondering if we're gonna do a one of those half fills in the rug pull, or maybe make it close to like 370, 350, and then yoink.
They need to go ahead and yoink it.
Sentiment is wrong 99% of the time. Everyone's scared. You should be buying. I mean, that's a way to look at it. You can go with the contrarian opinion, but at the same time, like we have our PCE numbers that are getting ready to come out. Inflation is still going to be red hot, and this market rally is just one move, is just one bear flag on a longer downtrend. So, like, I trade with the trend, and no matter how you look at this, like this rally that we're seeing is really small potatoes on the larger picture. Could we see a reversal? Yeah, anything's possible. But when I look at the market's condition right now and the economic condition, the world stage, and also just the technicals, like just the technicals by itself. Look at the entire time we've been doing this rally, the volume's only been getting smaller. Only smaller. And we're going up. Even if we fill this gap, even if, it will still not break the bear flag. If anything, it will only be continuation of a channel, and we'll be bouncing off the top of a channel.
Yeah, I see that top of that channel right around 373.
Yeah. So, could this be a channel? Absolutely. It could totally be a channel. In fact, I would argue it is a channel, and we're about to hit the top of it. That's just my opinion.
GameStop just broke 27.
Let's go,
GameStop's
Jimmy.
about to move.
Apple pumping is what is really throwing me for a loop. Apple just seems to do the opposite of whatever the market's doing, and Apple is the reason why the market's pumping right now. Make no mistake.
They just told everybody that they're not gonna up production because they're not selling as many units. The demand's down. Makes
Right.
Somebody said that, not necessarily Apple. That's the catalyst right there. I'll always go back to that Jim Cramer episode, or the Jon Stewart when he had Jim Cramer on.
Yeah. Granted that nothing happens on the world stage is the key phrase. Right now, the world stage is a circus, and now we're talking about Russia conscripting Russia and U.S. dual citizens.
Hey, True Demon.
Hey, who is this?
Hey, this is Alakazamo. I got my last class of the day, and they want to say hey and ask one more question.
All right. Yeah, fire away, kids. What's up?
Awesome. And just a reminder, I do have a whole class listening, so other people, please keep it appropriate for the next maybe 5 minutes.
Going back on mute. See you guys in a minute.
Go away, logical. Go back in your corner.
Fuck no.
Hey, I'm serious. Who was that?
Who was that?
That was a Verde that we haven't seen in forever.
I don't think Verde knows there's a legitimate class.
There's a legitimate class of kids listening right now. Seriously.
7th grade.
Can y'all hear us?
All right. Let's go ahead and go with the with the question. Don't do that again, whoever it was. I think I heard somebody. It sounded like
Hey, can you hear me?
now I can hear somebody.
There he is.
How do I get started with stock market as a 12-year-old?
How do you get started in the stock market as a 12-year-old? So the I just want to make sure that I heard the question correctly.
I heard it. I mean, you heard it correctly.
Okay. Yeah. So there's a lot of ways to get started. It depends on what your goals are. For most people, what I would suggest is to get started slowly with investing. There's a couple of ways you could do it. So one way is you can ask your parents to open up a custodial account, and you can actually trade the stock market just like what we're doing right here. Your parents have control of the account, and they're able to see all the trades that are made. You can invest slowly into the stock market. One of the classic ways to invest in the stock market is to put money into an index fund, such as the S&P 500. That's the list of the top 500 stock tickers on the U.S. stock market. And that's actually what we're trading right now. Currently, we're in a very bad market. We call it a bear market. The opposite would be a bull market. So normally you invest in a bull market and you watch your investments go up. Meanwhile, we're watching investments go down, so we're doing stuff that's a little bit more complicated. But this is what normal investing is. This is you just buy and you hold onto your investment for a significant period of time. And this was actually asked by another class earlier, but somebody asked if they had bought $50 worth of stock in on the day that they were born, then today it would be worth $430, I think is what the number came out to. And if that would be just if they had bought the S&P 500. There's other things that you can buy. You can buy individual companies that you like. Like if you dream of owning a Tesla one day, you can buy some stock in Tesla just because you like them, or it could be anything. But the key is to start early and to stay consistent. And besides having a custodial account, the other thing that you can do is you can get something called a change investing account with something like Acorns. It's very similar, but the idea is that they invest on your behalf. And the way it works is you attach a credit card to the account, and every time that you swipe your card, it rounds up to the nearest dollar, and then it takes that small chunk of change and adds it to your account, and they invest it on your behalf. And then that grows your investment over time. And I started that when I was 18 years old. By the time I was 24, I started with just $500 that I invested right away. And then over time, that grew to become an account of $18,000, only $12,000 of which was my own actual money. The other $6,000 was actually grown from the value of my account. And that's how I got my initial portfolio started in investing. So I hope that helps and gives you some ideas. If you do decide that you want to try trading the stock market, it's okay to do that. But I would say you should probably try it with a paper trading account to start with. Don't use real money. Use fake money with a paper trading account and learn how it all works. And this is true for everybody.
Look in the App Store. They can all look in the App Store. There's a bunch of paper trade apps that you don't even have to have an account for. You just put it on your phone and you can practice and mess around with it.
Mm-hmm.
Thinks I'm gonna do that.
Awesome.
I think we have one more question. What is it about? Okay. I'm sorry, that was a question about Discord. Never mind. Hey, thank you so much. Have a great stream, and I'll talk to y'all later.
Thanks, man.
Bye.
I love it. It's so cool.
That is so neat.
You know, Dr. Fox, in 1992, I was in the 9th grade, and that's when I got my first cell phone. But nobody else had a cell phone. Everybody else had pagers. I was a cool kid.
I had a pager right before I had a cell phone.
No, freshman in high school, 1992. I graduated in 95.
Oh, Nokia green screen?
No, it was Motorola. It was the gray trapezoidal looking thing.
Oh man.
The Razor one? Or wait.
No, here I'll show
Yeah, that was
you.
before. Okay. Wait, like the brick with the antenna off the top?
Yes, sir.
Oh yeah, my dad had one of those. Okay.
Yep, it was a gray brick, and you flipped it open, and it exposed the keypad, and then the only screen on it was a little calculator type screen, and it showed you your signal strength. That was it.
I had one of these prepaid beauties, the gold Nokia.
The gold Nokia. Oh
You had
man.
to be careful because at the time I was living in Florida and we're so close to sea level. If I dropped it, it could put a hole through the earth.
Somebody somewhere has one of those in a drawer that they can pull out right now, turn it on, and still have half battery life.
It's a problem. I always had battery. I just ran out of minutes. All right, GameStop 2710. Testing intraday highs.
Looks like we may be forming a tweezer top on this move here from the top. I decided to draw along the tops of these wicks on the SPY just to see where these tops had hit. And sure enough, this is exactly where the SPY ran into trouble and started getting rejected. So this might be where we finally start to see it turn around.
Yeah, 2-year bond rates just got a little bit of a pop off the low. We'll see if it continues north or gets rejected.
Let's see what HYG is doing. Looks like we've got a shooting star candle actually on the 15-minute. You see that? We got a big green candle, and now we've got a shooting star to complete the pattern. And we failed to break above previous highs. We'll see what happens. I feel like the market really pays very close attention to my paper trades when I'm streaming them, because it likes to take my money when I start putting it out there in the public.
It's that intern in the Discord.
Right? There's an intern somewhere in the Discord from Citadel that's like, all right, there, he's got a whole bunch of retailers going short on the SPY. Pump it now. It's easier to make money when we keep everything we're doing a secret. We just hide here in the Discord like little gremlins in a cave.
Can you imagine being the guy that studies for a Series 7 just to have to sit in a Discord with a bunch of degenerates and listen to what they do?
That would be a hell of a turn for the worse, I feel. Like if this is what trading has devolved into on Wall Street, then I would just be so severely disappointed. Hey guys, I've already looked over AVCT. Like I said, I'm not really interested in it. I checked it before, and it doesn't match up with my thesis. It doesn't have it doesn't have the same indicators that I look for. We can try pulling up like the short exempt data, but I don't think that it's going to prove much. We'll go take a look at it. Short exempt ratio is a little bit high. It's had some recent volatility, but that's just because it's moved up to it moved up by about 40%. So the short exempt volume was spiking as the price was creating new higher highs. Now it's coming back off the other end of the hook.
Right now, if it breaks this, we might be shooting up to 29.
You're looking at ABCT.
GME, baby.
Oh, GME. Gotcha.
Did you see the gamma ramp on GameStop?
No, actually, I haven't looked at it in quite a while.
The Ortex data is kind of crazy. The 3 month days to cover is at over 10 days, and it's got a short squeeze. It's got an Ortex score of 87.
Wow. All right, that's pretty neat. I can see it wants to break above this 200 moving average on the 30 minute. What is it on the daily? Got a long way to go. Ooh, we've got a double bottom on the daily. That's actually quite nice. Got a rising bottom on the daily chart. Good move following earnings back in early September. Bounced off that support the day. Let's see, what was this? Was that last Friday? Interesting. Well, for those in GameStop, congratulations and good luck to you. See the MACD is moving in your favor. Your MACD just rejected the cross and is now moving back to the upside. Got a double bottom pattern right here. You can most likely play this at least to the $29 level with a opportunity to reach as high as the 200 moving average. Which you may notice is very, very, very close to the 100 moving average, and if we see that the price does end up crossing, we may end up with a bullish cross of the 100 and 200 daily moving average. I am no longer covering Mullen. As far as I'm concerned, the stock is just dead. The executives are not interested in saving the company. They are only interested in selling stock and making money for themselves. They have no interest in the success of the company. It's literally, they are milking the stock. That's my opinion. So that's the last thing that I'll say about Mullen. AMC is also having a bit of a rough time. It's got a little bit of a pop on the short term. The only really bullish thing that I see for it is that there's rising bottoms here. So if AMC does manage to cross above and break $8, then maybe we'll see it retest its previous highs. But AMC has been such a drag to watch. Retail, like, overall just gave up on it. Everybody pretty much gave up on it. And Groupon, I've been watching for a while. I haven't looked at it in a few days. Thanks for calling that out, Verde. Yeah, I've been watching Groupon for some time. It kept turning up on my screeners for Ortex, and I kept telling myself, like, I'm not ready for it yet. It's not low enough. I think it'll go lower. And so far, I've been right. But yeah, Groupon was one that I was like, this one looks like it's coming to the bottom of its chart. What I've essentially been waiting for is for the shorts to like really over leverage themselves and pile in all on top of the stock, and then for there to be a turnaround in their earnings. I wanted to see positive earnings consistently for the next couple of quarters. If I could see some positive quarters for Groupon, or at least a nice annual report, then I would have been a little bit more excited about it. This wouldn't be the first time that Groupon made a really big move to the upside if it bounced off of this bottom. It's right there. It's very close to the bottom of its chart. That is a good point. I didn't see the gamma ramp. So it's so nice to have you back, Verde. I miss having somebody that's just constantly looking for the big squeezes. So this is the gamma ramp on Groupon. And this is basically the combined open interest against the free float for Groupon all the way out till October 21st. So according to this chart, excuse me, got a yawn. According to this chart, if Groupon broke through just $10, then all of a sudden it would jump to about 8% of its free float in the money. So they're trying very heavily to pin it below this level and keep Groupon kind of just shove its head below the surface of the waves for a little longer. It has to hold below this level for a full month for it to close below on this end. I've been watching Groupon for a while, actually. Come on, Groupon. Or come on, Ortex. Show me Groupon.
There's a inverted hammer on the daily on Groupon too.
Is there really? Yeah, short interest of the free float is above 52.5%, and the free float on loan is above 70%. What's tough with Groupon is that it has a really large float. Oh, wait, no, it doesn't. Why did I think that it had a large float? It's only a 19 million share float. Verde, why? What's your thinking? Why would market conditions make people run to Groupon just because they offer discount codes?
Probably thinking inflation and the squeeze on the wallet.
I can see the case for it. Let's look at this on the near term. Right now, it's throwing a descending triangle. See, the pattern is still bearish. It did set up a high. It did set up a higher low though. I see that inverted hammer candle. I would have called it a tombstone.
Yeah, tomato, potato, same thing.
No matter. Yeah, it doesn't really matter. I see that the volume is dropping as the price is in decline, so that is actually a nice sign. And volume was rising on the upswing. You know what? It could be time. It could be getting close. It could be getting close to the time. Their earnings are coming up here in November. That's what I've struggled with, is that Groupon's price movement is just so strange. Like, look at how choppy this is. This is a daily chart. It makes double bottoms constantly. And then it'll just trade sideways for months. Just huge swings. Yeah. I'm trying to decide what direction it'll take next. Don Knott says SPY gap fill down to 221.95 eventually. Shooting star is bearish? Yes, a shooting star is a bearish pattern. If you're looking for a shooting star pattern, it's essentially when you have a trend that's going up like this, and a shooting star is a candle that has a red body with a very long top wick. So, ugh.
All right, SPY is approaching the top of the descending channel that it's been in for, well, a few weeks now to a few months. So this will be a very important resistance mark. We'll see if we can break past it, or else it might get smacked on the head and head down pretty quick.
This is what happens when you don't take your stops. You have a bad time. I'm so annoyed by the SPY right now. It truly is a meme stock. The volume's still going down. We had the one pop in power. We had the one pop on power hour start.
372-ish is going to be the really tough breakthrough for this. If it doesn't get enough volume and it doesn't push hard enough, I don't know if it's going to make it.
It's moved almost $13 to the upside today because what? The overseas banks decided to turn their printer back on?
That, and yesterday when it hit those June lows, it wasn't able to break them. I mean, it tried. It did a lot of consolidation right there, but once it reversed and turned back up, I think the market read that as telegraphing a pop. We've had so many consistent down days. I can't imagine how many puts have been purchased on the market. So I'd have to think too. Market makers are probably relieved to get some of a reversal.
Oh yeah, market makers wanted this badly, guaranteed. They've been trying to keep the market propped up for a long time so that they could get all those puts to expire worthless for the last month.
Yeah.
They've not been getting it, just hemorrhaging money the whole time. This will probably be the first. This will probably be the first good close that market makers have had in a long time. Max Pain, what is it? Is it 372? I'm calling it. Maximum pain is 372 for the week. I'm looking it up right now.
That channel, that would make a lot of sense.
Let's see. Maximum pain SPY.
$372.50 is the 23.6 retracement from the
366.
Max pain for calls is 372. Maximum put OI strike is 350. Max pain is 366.
The expiry for Friday is 380. That's the max pain average.
That's pretty significant support turned resistance mark too.
So the closer to 380 they can get it, the more money the market makers are making. But as long as it doesn't fall below 360, market makers are still printing cash because they make the market, and they make the market do what it wants because that's how they make money. And it wouldn't be a stock market if the market makers weren't making all the money. I bet if I had quantum computers and a staff of 10,000 quantitative analysts, I'm sure that I could make billions too.
You just need enough money in order to be able to push your bet.
Have y'all watched that movie, The Hummingbird Project, I think is what it's called?
The Hummingbird Project. Can't say that I have.
It was like that. This company was trying to put a fiber in between two stock markets straight through the mountains and everything to shave like 0.6 of a second off of them getting the quotes to be able to do arbitrage. I tried to give the basic premise without like giving away the whole movie because it's pretty good.
Sounds like something shitbags trying to front run you would do.
I'll never forget being a kid, being over at my grandparents' house, and they would always watch 60 Minutes. And there was that one special that they actually visited Wall Street and they found the fiber optic networks underneath, and they were like, "This is how they do it, folks."
Go figure.
It was right around the same time that they were blowing the lid on the fact that wrestling was scripted.
Fake news.
That can't be true. The only thing holding the SPY up is just Apple. It's Apple and Netflix, of all things. If Apple wasn't pushing 150 right now, the SPY would still be down back at 165.
I mean, Amazon's had a fucking hell of a day today too.
Has it really? I guess you're right. Yeah,
112.
Amazon's
Yeah,
back
he
up
pushing.
at back up 3%. Netflix is the real winner here. 9% to the upside. I was saying though, like if there is a rally, just stay out of its way. Like that's just the way that I trade. If I see that there's a rally coming, I just stay out of its way and then ride the market back down.
Flies up 2.5% on everybody basically telling us that they're gonna fucking drive inflation higher.
We're gonna burn the country to the ground. Buy calls. That's pretty much how the logic of this is going.
Funny, like I look at the news feed from today, and it's just like every single person and every single thing talking is basically like, inflation's a thing. We need to combat it harder. We're determined to get inflation down. We're gonna do what it takes to get inflation down. We're gonna raise rates longer, and we're gonna keep them up there. We're gonna raise rates harder, and we're gonna keep them there longer. And everything's just like, hey, let's buy this.
Defies all logic, man, but whatever. What the fuck do I know?
Further out. I should have just went for further out. We're still right. It's just early.
Yep. Again, I'll stay out of the way of this market rally. That's fine. Once again, this trade that you see here on screen, I have to keep repeating this. This is just a paper trade. This is not real money, okay?
I'm tripling my fucking my bet from today. I'm tripling it whenever this gets to the gap fill. Hit that gap fill overnight. Let me make everything back that I lost today plus fucking 150%.
I'm only a little bit annoyed because I know that we've only just tested this low. We've got a long way to go yet.
I knew it was like, yeah. I mean, I knew it was gonna bounce off of this. I didn't think we were gonna push gap.
Neither did I, but whatever.
This is the break that it needs. It's gonna, do whatever it needs to do over the next day or two. Tomorrow, PCE and all of the economic data that comes out. What do we have? We got GDP quarter over quarter tomorrow. Core PCE, continuing jobless claims, initial jobless claims, and Bullard speaking.
There you go. Somebody bought 210,000 calls on Revlon. I need to verify that.
Just tested 372.
I need to verify that. There's no trade of that size. There's not a single trade of that size. Not even close. The largest trade is already expired, and it was for 1,000 call contracts for 650, and they expired out of the money. So, no. Try again. The volume on Revlon. It is bullish, but it's mostly from people selling puts. People are taking profits. This latest pop in Revlon, while it is forming an inverse head and shoulders, is mostly made up of just profit taking, short covering, puts selling. There's nothing to indicate a bullish turnaround for Revlon. Not yet. One thing you got going for you is the MACD is crossed up and it seems to be holding up. Yeah. You had a bullish rejection on the MACD. So, I don't know. Maybe Revlon's going to go back up, but I'm not really interested in trading it anymore. This guy JJ really doesn't like me.
So Bloomberg put out an article about the nitrogen and potash shortage because of the war with Russia. In Hell's Trading Floor, we were talking about that the day that the war broke out, and Bloomberg's just now getting around to it.
Wow. Everybody wants to predict that the SPY is going to go back up to 400 again, and that we're going to come out of the bear market, and then everything's going to be fine. But still, like, my dudes, we've done this. How many legs of this have we done where we have seen these same pattern setups? We have done this 3 times. Sell, rally, sell, rally, sell. And then we hit a bottom. Sell, rally, sell, rally. We got one more leg to go. And that's only if you subscribe to Elliott wave theory or just a standard 3 drives pattern. And if you also consider that the entire bear market is one big 3 drives pattern, you have one leg down, one rally up, another leg down, rally up, still got to complete another leg down. And that leg will take us all the way back down to 320, 340, somewhere in that range. And that's just estimates based off of Fibonacci's, off of 3 drives technical trading patterns, off of historic bear market patterns, off of seasonality. There's a lot of confluences to go along with this trade. Is there a rally happening right now? Yeah, absolutely. It's not taking us out of this bear market. We're not going to return back to $400. We barely even touched $400 the last time that we looked at it, and we got rejected so hard we gapped down $20 the very next week. If we come even close to $400, the market's going to slap it in the face.
All right, I have taken profits on my SPY calls. I'm up 75%. I am leaving one contract to see if it keeps rolling overnight. I also took profits on GameStop at 55%, and I still have 5 contracts. See what happens in the morning.
GG, dude. Congratulations. Nicely played.
This is going to be nice. I'm finally back up over 25K, so I can day trade again tomorrow.
I was trying to get to my mic to ask you if you got over that.
I did.
Bravo, dude.
With a little buffer.
Very good. I'm not gonna sweat this rally too much. I'm just looking for the weakness to really take hold for a full day, and then average down on my puts. It's not like this rally is that much of a surprise. I knew the rally was coming, but I'm just trying to keep people. I just want people to be careful because a lot of the times people try to time these reversal rallies. They get it wrong and they lose half of their capital trying to time those when it's much safer just to watch the rally occur and then see when it starts rejecting and then just use that to average down in long-term puts. And it's a much less stressful way to trade. Like I'm up. See, overall up overall 20% this month. Like you don't have to time these all the time. If you want to, you can. Like that's totally fine. It's up to you how you want to trade your portfolio. Those strategies are all good. But for me, I don't like to be staring at my charts all the time. I got a job. Amir Mani, what do I think of Biora? Will it do a reverse split? It's possible, but they've got over a year to, well, not over a year, but they have at least 9 months to get their stock back into compliance, and they can file for an extension. They might do a reverse split, but they can just file for an extension. That's the more likely course of action. Companies do this all the time. They'll just delay it. I do have to say this is a nice rip in the market. So if you inversed me, then I guess you would be up quite a bit. But I am playing this with the trend. My goal isn't to perfectly time the swings here. This is a single day trade. Very nice. Don't get me wrong. Very nice. I'm very happy for everybody. But for me, my goal is to just get somewhere near the top of the hill and add into put positions and then keep going short because there's more selling to come. This is just one leg of the rally. This is how I keep my heart rate down when I'm trading stocks.
So inverse demon, does that mean it's a false demon ETF?
A false demon ETF. That's pretty funny. Yeah, I've been thinking about averaging down in Biora too, but I'm already so heavy in it. I'm overexposed to Biora as it stands, and I'm okay with holding it for 5 years. So I think I'd rather use the money to just trade here and there on the market. At least for now. If something crazy happens and I need to put my money somewhere, then maybe I'll put a little bit more into Biora while it's still down. But for right now, it's not the time. Not for me, anyway. That's just a personal decision. The price is very attractive. If it wasn't a bear market right now, then I would have said yes. If it was more accommodative to the overall, if it was more accommodative to emerging growth companies, especially healthcare tech sector, then I would add more. But at the moment, I think I'd just rather trade the SPY. CEI, natural gas play going into winter. My thoughts were with the possible war and EU energy squeeze, this could be the highs of last October. CEI, if I remember correctly, they transport oil, so I'm not sure Mm. Eh. That's a tall order, homie. Maybe I'm wrong. If I see the stock trade above its 200 daily moving average, oh, that was its hourly moving average. I don't really like the look of the charts. I don't really pay too much attention to CEI. The penny stocks and energy don't really perform all that well. I'm looking more for clean energy in the United States and something to overtake Russian oil. If anything, I think that probably this is only if you have access to the futures market, but going long on natural gas futures would be the way to go there. Because that way you're not dependent on the performance of any company. You're just betting on the commodity. And futures of natural gas are surely going to do well. Will Biora recover or will it be bought out? I don't really know the answer to that question, so there's no way for me to tell you. But my opinion is that Biora on its own is capable of standing on its own 2 feet as a leading biotech company. Ding, 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 that's the bell. Let's go ahead and recap the SPY and see where we closed at. So we closed at 370.51, currently trading a little higher in post-market. The market is currently enjoying a very lovely pump that, quite frankly, I was surprised that it got this far this quickly. I did not expect there to be such a quick turnaround on just one day, but there you have it. I was actually expecting the Fed speakers to come out and be extremely hawkish and for them to talk the market down. And by all accounts, they were, but the market loved it for some reason. Near as we can tell, the decision overseas in the UK is that the central banks are going to sell additional bonds, and this is going to have the effect of printing money because it's going to increase the bank's supply and increase their treasury supply. So speculation in the broader forex market is that inflation is going to resume and that they're going to turn on the printers again. And for whatever reason, this somehow means that the United States has to do the same thing because apparently the stock market believes that we'll just copy whatever our neighbors across the pond will do. But we're in 2 very different situations. Frankly, I think that if they do turn on the printer overseas, then it's just going to create more problems for the rest of us. And there will be a large wholesale evacuation from equities into precious metals. People start doing things like buying gold and platinum and silver and so on. That's typically how the market reacts to a big inflation crisis. Let's see. Oh, I forgot about the GDP revision. So have the GDP estimates come through? If somebody does happen to have the GDP now revisions, I'd appreciate that. I try to read the GDP now on TradingView, and it honestly just doesn't really make a whole lot of sense. This chart always reads stupid to me. The revisions are still showing a 0.3, which this was actually previously up at around a 2 estimate. go check out the high yield grade bonds. Ooh. Big Dragonfly Candle on the HYG. SPY is printing a tombstone on the 1 hour. Yeah, it looks to me like the high yield bonds are starting to price in a reversal now. So maybe we'll end up gapping back down tomorrow. You notice that there was a gap here in HYG, and this did not get filled, whereas the SPY was already attempting to fill its gap. Now SPY is being rejected. We're down in post market. I find that actually quite interesting.
Hey.
Hey.
Check out HYG post. Check out HYG post.
Oh, I didn't turn on post market trades.
Turn on post market for HYG.
Thank you. Thank you, Persephone. Thank you very much. That tells me a much bigger story, and now I want all the puts. Now I want all the puts. This was the reversal signal that I was waiting for. Oh, somebody got a great deal. Somebody got a great deal. Uh-oh, SpaghettiOs. Yeah, methinks that the market is probably topping out today. Y'all don't have to listen to me. You could do what you want. You do what you want. I lost today. That's fine. Y'all do what you want. But I think that this is going to be the highest that we see the market for a little while. Bull case. We gap up to close this gap from September. And then we head down. And then we start retesting these lows again. I'm waiting for the market to flag and retest the lows from June and September 7th. So we'll see how that goes. That's just my thesis.
Wow, look how perfectly it tapped this channel.
Was it the parallel channel that we drew in the afternoon, J-Ruff?
It's the big channel from 409.79 down to the low. That's been going on since September 12th. And it came up and tapped the 23.6 retracement, and that's where it sold off right before close.
Oh, yep, you are right. I think my fib level is just a little bit off from yours.
I started mine at the bottom of the gap instead of the top of the candle.
Oh, I see it. Yep. If I start mine at the top of the gap, it rejects just before it reaches the 23 fib level. I don't normally use fibs, but I like to double check my work with you because your fibs have been pretty reliable, J-Ruff.
I appreciate that.
Yeah. What I like here is that we're being rejected below a 200 moving average on the 15-minute and a 50 on the 1 hour. And this is consistent with other moves that we've made. You see this big spike up. We had a huge rally intraday, and then the market gave up and then closed lower the following afternoon. Like here we had a big gap up on September 21st, the market dropped down and then it tried to reclaim that 50 moving average on the 1 hour and then closed lower, and we headed even lower than that. So I treat these as just bear flags, each of these. They're just different legs of larger bear flags. And now that we've got a shooting star candle as the closing candle for the day, I really do feel like the SPY is going to reject this in the morning. I don't think we fill the gap. We might fill the gap, but even so, I think the SPY will give up at the end. And I'm not all that concerned. And I'm not all that concerned with the rising volume at the end of the day. Sorry, J-Ruff, didn't mean to cut you off. What's up?
No, you're fine. I was totally agreeing with you. I mean, we're only going to go up for so long. I don't see this as the inflation's over, let's rally play. If anything, I can see us continuing to trend down over the next month or two. And if we go down far enough, and the Fed at like come November starts to ease up on the rate hikes down to the 50, possibly a 25, I could see us having a big rally in the end of the year.
Yeah. See, that's what I was playing for. The real rally that I'm waiting for, where I'm basically going to exit all of my bearish positions and wait for the market rally to complete, is in November. So once we go into the holiday season, like second week of November, I'll basically be out. I'll probably be out of all of my bearish positions at that point. Once we go into the November season, there's no reason to stay bearish on the market, just because even in the worst bear market that we've had, like for example, 2008 financial crash, the Great Financial Crisis, during the GFC, even in November, there was a slight rally. We made a lower low in December, but for the most part, it was just chopping sideways for those 2 months. The holiday rally is a pretty consistent season where you don't want to be short on the market, and you're just better off staying out of its way. With how low I expect the market to go before we get to November, I'll be very happy taking profits from all of my shorts on the market, and I may even go back long on some things, but I'll be very choosy about what sectors I stay in, because I don't want to be exposed to the entire market with what we're dealing with. The overall situation with the market, there could be bankruptcies coming just around the corner. Drew Hanley says, I'm just going to keep buying puts every 5 it goes up. Hey, that is a strategy. I like to be a little bit more conservative. You can see I did a big cluster of sells right here as the market was pumping. So this reflects my own trading strategy. Although I would have, if I was doing actual day trading, I would have had a stop loss. I just took away the stop loss because I'm like, no, and I'm just being pouty, and I'm not gonna buy back my positions. I'm not gonna buy to close. But that's something that people should do. You should have a stop loss. It's better to have a stop loss and save your capital. But this is a paper trading account, so we just do this for fun. I'm trying to teach good habits. But on days like this where I'm just feeling like all full of piss and vinegar, I'm just being contrarian. So don't take me too seriously. But it's not the end of the world. My position, I'm pretty okay with it. Like if I was actually playing with this much money, then my short position, I would be riding out this volatility. I wouldn't choose to just exit my position right away just because it kept going up and I didn't time my entry perfectly. That doesn't make sense to do. If I see the words full port in the chat, I'm just going to kick somebody out of the Discord for the day. You're going to be in timeout. I don't want to see the words full port in my Discord. Y'all take on way too much risk, and I can't be responsible for your for your plays. What do I think about BBBY? I haven't revisited Bed Bath & Beyond in such a long time. You know, frankly, I'm not really playing any of the meme stocks for the most part. I'm really focused on the SPY. I really mean it. When I was, the thumbnail was a bit of a gag, but I really do think that the SPY is the only thing that people really need to be playing now, with the market being the way that it is. Your chances of success are a lot better. You have a greater chance of success just figuring out the trend of the broader market and trading that trend. And don't try to get too don't try to be too creative about, you know, swinging positions long and short. Just don't change your mind. When you see what direction the market's going, pick that direction, stay in that position, and then wait until you hit a take profit level. Have a reasonable take profit level, but, you know, just stick with the trade and don't let yourself be conned out of exiting your position early. All right. So I was looking at Bed Bath & Beyond some time ago, and the charts were showing that there was this triangle that was kind of hidden in the volatility, but it has since broken down. So I really don't think that this counts anymore. From what I can see here, Bed Bath & Beyond is trading in a bull channel, which is named so because they tend to break up. It's just a downward channel. It's a pretty tight channel, and it is testing the outside of it. We might be seeing a breakout. You might be. Yeah, I think you are seeing a breakout here. It's holding up support here at 650. It closed at this level. So this is weak support right now. And in this channel, you had a rejection of the midline of the channel. So it gapped down and it bounced up off of it and then continued to the upside for the remainder of the week. So this is actually, or this was just today. So we gapped down today and then it bounced outside of the channel very quickly. So this is actually pretty good for Bed Bath & Beyond. Going into earnings, how I would interpret this is that the market is pricing in a reversal with the expectation that their earnings will be positive. So you'll have to see what earnings look like, and I would be more cautious, just because Bed Bath & Beyond does have a serious financial problem. They are dependent on improving their earnings, which so far have been massive disappointments. For the last 4 earnings in a row, they've just been huge disappointments. They've missed massively on the last 2. One was down by 95 cents, and the last quarter they were down by a whole $1.40. So that's quite a huge miss. So they need a good earnings report. They need a very positive earnings report. If they don't get it, if they miss again, then you're looking at more downside risk, and bankruptcy is still on the table for these guys. So you have to be honest with yourself about the risks. Just keeping that, just keep that in mind. You do have this level of support that it's managed to recapture. So this is the one technical that you have in your favor. If you see continuation of this move, then maybe you see a head and shoulders pattern play out. And if you do manage to break out above those levels, then maybe we see Bed Bath & Beyond trading above $7 again sometime in the next couple of weeks. I've already covered AVCT. I'm not gonna go. I'm not gonna go back to it. AVCT. I'm not. I don't subscribe to the theory that Microsoft is going to buy them out. I don't see the case for it. Financially, it doesn't make sense for Microsoft to do that. They can just wait for the company to go OTC, and they can just make a deal with them behind closed doors. They don't have to buy them at market. Flinster asked TD, would you consider exiting the real estate market puts in November? I figured that's going to be a hard time for the real estate market in general. I'm assuming you would keep those in play. No, actually, November, I am considering taking profit on all of those puts. Reason being is that the housing market is likely to see a drop in inventory at that time. People tend to take their houses off the market during the winter. People don't want to deal with that during the Christmas season. So you see a lot of homes come off the market, and then there tends to be a lot of work done on the inside for the houses that need to be fixed, and then they relist them in spring. And a lot of real estate agents are going to probably share this advice with their clients to take their homes off the market for the season and then wait until spring when the big selling season starts. Some might start listing early, like February, and then we'll start seeing the inventory resume. But how the market will likely interpret this is that now that housing sales are in decline and the housing inventory is dropping, they'll interpret this as the market turning in favor of sellers. So sellers will have a better chance to actually get
Hello, this is Eric Bot. I told you big things are coming. Can't wait to not be able to comment on BBIG stuff. How are your calls doing? Logical chaos.
I wasn't expecting Eric Bot to come in for a visit and just just bomb
Why
my
did
stream.
Eric Bot just call me out?
blame Flab. Anyway, now I lost my train of thought. The for the real estate market, as sales decline and listings decline going into the Christmas season, the market will interpret this as turning in favor of sellers. So they'll be able to dictate better terms, and they'll expect prices to go up in the spring. However, I really think that demand is still going to be dead by spring, and nobody's going to want to be buying houses. And the mortgage rates are going to continue to go up because financial conditions and tightening will continue. So while that's going on, the banks are going to be tighter for cash. They're going to be originating even fewer mortgages. So the conditions for loans are going to get worse for buyers, and that's going to disqualify a lot of them. So I think that in terms of the housing supply, the supply doesn't matter as much. But I also think that the market is going to put a lot more weight on supply than it deserves. So we'll see how it shakes out. If I see the market is continuing to panic going into November, then maybe I'll stay in those XLRE puts. But for right now, I'm just going to hang on to them with the intention to get out of those by November and take those profits. Because at that point, I'll be getting really close to my expiration in January. And once we get to like end of December, if I see the market turning around and we get some if we get some relief in the XLRE market, then maybe I'll jump right back into it, because I do think that there's a lot worse conditions coming for the housing market. As far as where we're currently trading right now, XLRE is making a really lovely bear pennant, so I'm really liking this. God, my drawings suck. There we go. So XLRE, if I see a new low here down somewhere around $36, then I'll interpret that for continuation and expect XLRE to continue dumping going into October. And then I'll be closely watching the monthly supply of houses. If housing supply continues to go up, then I'll stay in the position until November. If the housing supply starts to wane early ahead of the season, then I'll exit right there at the beginning of November. Hey, Alakazam. Yeah, it was my pleasure to talk to your class. I try my best to keep it professional all the time, but sometimes my mouth and my bad habits get the better of me. Yeah, I'll be happy to answer any other questions that your students have. If you want to give them a chance to really think about it and how they want to and how they want to learn the market or something like that, I would be more than happy to answer some questions. If you really want to turn their heads around, you can let them know that I don't do this for a living. I actually break into computer networks for a living instead of trading the market for my paycheck. This is fun for me. January 2024 Flintster for the XLRE puts. If you have those, I mean, you may as well hang on to them if they're like really deep in the money, because those leap puts will perform really well. I didn't go that far out because they were just so expensive. Let's go take a look at the settlement paperwork, and then I'm gonna probably close the stream pretty soon here because I gotta QA some reports for work and get on with the rest of my day. But I see that BBIG has reported that their settlement is concluded. So this will be a great opportunity to go over the current situation with BBIG. Let's see. Oh man. Give me a few seconds to try to open this link up. This is from Hoddle the Blunt.
Hey, True Demon, while you do that, before you end the stream, I just want to thank you so much for helping my class today. They thoroughly enjoyed it. Many of them did not have questions ready and wanted to ask if they could have a few prepared for next week.
Oh yeah, I'm sorry, dude. I saw your message that you sent just a few minutes ago. I answered. I wasn't sure if you were still listening, but yeah, I'm happy to. It was my pleasure first, and I'm happy to answer any of their questions next week. We can talk about anything that anything they'd like to know about investing or playing the market, as long as we're encouraging them to do it safely and not blow their college fund on calls.
Exactly. That's why I was so appreciative how you put it through. I could not have done that better myself. I've been trying to do this for the past month since school started, and you did better in 1 hour than I've done the past month. I just appreciate you so much.
Hey, no problem, dude. Yeah, have them come back next week with prepared questions. I'll answer anything that they'd like to know. If you really want to blow their minds, you can let them know that I don't do this for a living. I actually, I don't know if you, I repeat this a lot, and I feel like I'm kind of turning into a broken record, but I'm actually an InfoSec consultant. I do penetration testing and break into computer networks for a living. This is my idea of fun.
Yeah, I had no idea about that. I'm not in all the time, so I've missed that, but it is good to know.
Let's see. I'm trying to get the court paper downloaded. Come on, man. I need this. For whatever reason, Firefox thinks that Samsung link sharing is is like inherently malicious. Good Lord. Can I have my PDF, please? I think I've got it. I think I can. I think I can. I think I can. All right. Here we go. This is it. Now we get to talk about something that really gets me excited. So, BBIG's agreement of court settlement has been signed, and we now get to go through the terms of the settlement to determine what the future of BBIG is and who's going to be in control of it. So, figure we go ahead and wrap up our market stream with this one to give everybody a good grasp of what is currently going on and what the outcome of the court case was between Zash Global Media's team and the Vinco Ventures Saboteur team, as I like to call them. So, agreement of settlement, dated 28th of 2022, is made and entered into by and among the following settling parties, each by and through their respective counsel: Vinco Ventures Inc., and I know it's here somewhere, and Zash Global Media and Entertainment and ZVV Media Partners. I'm skipping through all of the individual names. We know who's who. Okay. So, the settling parties have raised and settled various disputes. Vinco filed their action in court against the settling parties. And numerous counterclaims have been issued by the Zash Global Media team. Let's see. I'm trying to skip all the boring stuff, because this is just like all like, oh, blah, blah, we started suing you, then you started suing us, and we're now suing each other. This is like all of the boring stuff. Okay, here we go. Now, therefore, the settling parties hereby stipulate and agree in consideration of the benefits flowing into the settling parties, blah, 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 blah. This is the settlement. I'll try to simplify this. So, the settling parties agree that the management of Vinco after the effective date of this stipulation shall be as follows. A, the executive officers. Ross Miller shall be the sole CEO of Vinco Ventures. Miller and his team, which may include Gabe Hunterton, as president, shall run the company subject to the oversight of the company's board of directors, referred to hereafter as the board. As of the effective date, John Colucci, co-CEO, and Jones, CFO, will immediately voluntarily resign as executives and employees of Vinco or any subsidiary joint venture. Colucci and Jones will each provide resignation letters to the company within 24 hours of the effective date as resignation. As of the effective date, Colucci and Jones shall no longer be officers or employees of the company. Colucci and Jones agree to execute any documents reasonably necessary as requested by the company to effectuate their separation as officers or employees of the company, or as an officer, employee, or member of the board of directors of any subsidiary and affiliated entity of Vinco Ventures. John Colucci and Jones shall return all devices, documents, and administrative passcodes, passwords, and other company property to Ross Miller or any other company agent Miller so directs within 48 hours of the effective date. Jones agrees to consult with the company and subject to payment at a rate of $250 an hour as requested by the company on a month-to-month basis. This is purely in order to get his knowledge out of his brain meats directly into the hands of the new management team. This isn't permanent employment. This is because it's necessary to actually get Jones to give up information that they need, and they're probably going to be hounding and grilling him constantly to find out where the hell all that money went to AI pros. At least I hope so. Section B, the directors, as of the effective date, Colucci, Goldstein, DiStasio, will immediately voluntarily resign from their positions on the board. Colucci, Goldstein, whatever, and DiStasio agree to execute any documents reasonably necessary. 3, standstill. Colucci, Jones, Goldstein, and DiStasio agree not to seek election to the board. They will not seek to control position either alone or as part of a group or seek management, office, employee, or director role at the company or any of its subsidiaries or joint ventures for 1 year from the effective date. So basically, they're fired and they're not allowed to come back. Consideration. Vinco agrees to pay the following amounts in consideration for the outgoing D&O's service to the company. Colucci and Jones will be paid outstanding amounts due as salary plus severance, 3 months' salary for Colucci, 4 months' salary for Jones. The severance amounts in a lump sum on the first pay period after the effective date. Colucci and Jones' outstanding salary due and severance amounts are set forth in Exhibit A attached here too. This is kind of a pittance settlement. Most severance packages last 6 to 12 months of pay, so they got very little. It's basically enough for them to go and find another host to go and feast off of. Wherever these parasites are going, I wish them luck. So the company shall pay for COBRA benefits for Jones for 6 months following the effective date. He's literally the only one who's going to stay for the sheer fact that he actually has financial knowledge of the company, and they need to get that information out of his head, as I mentioned earlier. Within 10 days of the effective date, Colucci, Goldstein, DiStasio will be paid all unpaid pro rata board fees due up to the date of their resignations in the amounts set forth in Exhibit A. Within 10 days of the effective date, Goldstein will also be paid $100,000 as settlement of all matters related to his RSU stock options. So apparently he was holding on to some stock that he's going to be forced into surrendering. He's going to be paid out for those. Within 10 days of the effective date, the fees and expenses previously authorized by the audit committee as set forth in Exhibit C will be paid. Litigation and other claims. Here's the litigation that shall be resolved. Okay, so all charges are going to be effectively considered settled. Within 10 days of the effective date, Vinco will stipulate to the dismissal with prejudice of the claims asserted against Noble. So that is court language saying that they are forcefully dismissing their claims against Eric Noble, and they will not be permitted to bring them back up in court again. With prejudice means that the court has ordered that all their accusations have been deemed false, and they will not bring it up again. So they don't get to make these stupid accusations anymore. Within 10 days of the effective date, Vinco will pay all reasonable costs and legal expenses incurred by all settling parties in connection with the litigation and the New York litigation that preceded it, including reimbursement to the defendants and within 1 day of the effective date. So the Vinco team that is now being fired are paying all the legal fees. So that severance doesn't really mean much now. Within 60 days of the effective date, Vinco will stipulate to the dismissal with prejudice of its claims against Farnsworth, King, and Vanderbilt, and Farnsworth, King, and Vanderbilt will stipulate to the dismissal with prejudice of any counterclaims against Vinco and any third-party claims against any of the settling parties. So just as Vinco is no longer going to be bringing up any claims against the ZVV team, so is the ZVV team agreeing not to bring up any counterclaims against the Vinco saboteurs. While the litigation remains pending after effective date, Vinco, Farnsworth, King, and Vanderbilt represent they will not seek to add any new claims against any of the settling parties or any released parties. In the event Vinco or Farnsworth, King, and Vanderbilt have any other claims than pending in the litigation against any individuals or entities that are not settling parties or released parties, those claims shall not be dismissed. So Zash is going to be continuing their claims that remain outstanding against the Vinco Saboteur team, but they agree not to bring up any new ones as a part of this litigation. I am not positive of this, but this language reads to me that it doesn't prevent them from issuing new claims against them in the future as a part of separate litigations that come after them personally. If they were found involved in any kind of fraud, then this paragraph would not stop the Zash team from pressing charges if their fraud was found to be damaging to Vinco Ventures. Okay, other claims and litigation obligations. So first, all whistleblower claims filed before the effective date will be handled at the company level by Miller and Mr. Hunterton. No restrictions or limitations are placed on any settling party making any whistleblower claims or communicating with the company, the SEC, or any other governmental regulatory body regarding whistleblower claims. The continuing DNO and outgoing DNO each agree to appear as witness if requested by Vinco regarding any activities during their employment with the company or their tenure as a member of the board, and shall be entitled to fair and reasonable compensation for their time from the party requesting their testimony as a witness. So if for whatever reason we have to go back to court, then these guys will be required to show up again, but will expect to be paid. Okay. Interesting. This is what I was interested in learning about. The continuing DNOs and outgoing DNOs each represent and warrant that he or she has not directly or indirectly received any payment or other consideration or been promised that he or she would receive any payment or other consideration from Vinco's vendor, AI Pros, or its principal, George Yang. This is a statement that says that the outgoing saboteurs have promised that they aren't being bribed by AI Pros for their actions that led to the cash of $5 million being sent to them. So this is a court statement that they have not committed any form of money laundering. If this turns out to be false, then basically everything that happened in this court case is back on the table with the expectation that the saboteur team would be held responsible. So if they are lying here, then they are on the hook for not only fraud, but for perjury as well. Continuing DNOs and outgoing DNOs each further represent and warrant that other than Vinco and its subsidiaries, no entity in which they exercise control, including but not limited to HWY Data, Zash, and Magnify U, has directly or indirectly received any payment or other consideration or been promised any payment or other consideration from AI Pros or George Yang. So, same thing being stated here, except they can't hide the money at any of their other subsidiary companies. So if they received money to any of their side companies, then this statement also goes into effect that they basically lied to the courts and they received money from Yang as a result of their actions. So I strongly feel that what happened with the $5 million being sent to AI Pros was wholesale fraud and money laundering. We're going to figure it out, but we now have it in writing that they swear to God we didn't do it. We didn't know. So we're going to find out. All right. The non-compete agreement shows that the outgoing party each agree they will not join or accept any employment with or compensation from any of Vinco's current vendors for a period of 3 years. This does not apply to incidental vendors that have been engaged in transactions with the company totaling less than $100,000 over the 1 year preceding the effective date, such as Google or Amazon Web Services. So they're not allowed to go work for AI Pros or any of the other major vendors, but if they go work for Google, it's fine. Colucci further agrees that neither he nor any company in which he or a family member hold an ownership interest will compete with the company for a period of 3 years. For avoidance of doubt, the non-compete does not preclude Colucci or his company from continuing to work in advertising and marketing consistent with work performed in the past, but neither Colucci nor HWY Data will engage in advertising or marketing through click or Facebook arbitrage. This is basically just putting some limitations on what Colucci's allowed to do for a living He's allowed to be in advertising business, but he cannot be in direct competition with Vinco Ventures and BBIG in the same way that somebody would, like, say if they were competing with Twitter, open up another advertising campaign and then use Twitter against them. Confidentiality and non-disparagement. The settling parties agree they will not express orally or in writing any disparaging or unfavorable remarks, comments, or criticism of any of the settling parties regarding any actions taken by any of them prior to the effective date. So this is a gag order. They're not allowed to say shit about each other. They're not allowed to complain about each other's activity unless somebody in the future is found to be guilty of fraud or a violation of this very statement. Then all bets are off. DNOs agree further to maintain the confidentiality and material non-public information to the company, so they can't just go and spill all the secrets of the company's plans and, so on and so forth. Provided that it, except if they are obligated to disclose information in response to a lawful subpoena, so if they get called into court. Nothing herein shall restrict any settling party from making any true statements in any legal action, claim, or proceeding commenced, brought, conducted, or heard by or before any federal, state, or local court or other judicial regulatory body. This is just a general legalese statement saying that if they get called into court, they can say whatever they want as long as it's the truth. Okay, so claims of release. This is the really exciting bit. So Vinco, on behalf of itself and all of its directors, officers, employees, executives, yada, 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 shall fully, finally, and forever release, relinquish, blah, 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 all claims, rights, demands, blah, 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 blah. Oh my God. I'm just gonna read this silently because it's a lot of just repetitive, redundant words. Okay. Vinco, on behalf of itself, agrees that it has released all claims against Colucci, DeStasio, Goldstein, Jones, Farnsworth, Vanderbilt, King, Nobles, Ash, ZBV, and Magnify You. Jesus. Like, why can't you just say that? This is a 12-line run-on sentence. Lawyers have terrible grammar. That I do declare. All right. So the matter is settled. This is more of the same stuff, just putting them in by name again. Covenant not to sue and indemnification. All of the releases herein apply to any of the claims that were, could have been, or could in future be asserted by the individual releasing parties or other releasing parties in the forum of proceedings. So they are released from any claims for breach of fiduciary duty, unjust enrichment, abuse of control, contribution and indemnification, money damages, disgorgement, or any and all demands, actions, damages, claims, rights, or cause of action or liabilities whatsoever. Okay, so no suits can be originated against Colucci and his team for basically laundering money out of the company. That is part of this settlement. So unless something comes out into the public eye, like, say, a private investigator gets a hold of John Colucci's phone records and finds out that he was planning all of this shit to go in and launder money overseas, this is not going to come up again in court. No jail. That's upsetting. At the very least, they can go after AI pros, according to this statement. So the settling parties agree that AI Pros Inc. is not a representative agent, attorney, blah, 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 for which the company are a founder, chair, or executive officer. Nothing herein shall prevent the company, BBIG, from asserting claims against AI Pros Inc. regarding prior payments to AI Pros or in relation to the licensing agreements between Vinco Ventures and AI Pros Inc. So I believe that this, I believe I now understand the logic here. It's my understanding that the Zash team have decided that they will sacrifice revenge against Colucci personally for the chance to go after AI Pros. And I think that what this document is essentially achieving is that these guys have all settled and agreed to appear as witnesses in future court cases. And I think they're going to go after AI Pros. It's pretty much a certainty based on the language that I see here. So they are all going to go after AI Pros, and Colucci is going to have to serve as a witness along as everybody else that was on the Vinco team. And they have agreed, the Vinco and Zash team have all agreed not to sue or put in jail Colucci, Jones, DeStasio, and what was the other guy's name? Goldstein. So they are held, they will not be held accountable for their actions, and in fact, they're being paid, which I find frustrating. They're going to have to cover all of the court costs, but nevertheless, they're covering it out of pocket, basically. So now this is going to be put behind us. I really do wish that we could at least hold one individual responsible, the ringleader. That would have made me feel better. But in this world, in this business, it's not as important as getting the money back. And in fact, this actually could work in favor for Vinco in the end, because everything that they claim that happened as a result of this whole fiasco, they can use it to seek damages against AI Pros and force them to pay Vinco all the money that they stole and plus damages. Basically, they can sue them for full wholesale corporate sabotage. AI Pros, Alakazam, since you're asking in the Discord chat, AI Pros is an AI analysis company that was working for Vinco as a vendor. They had promised that they would be able to integrate their AI platform into Lomotive in order to boost their hits and the clicks. That was the idea of what they were promising. Pros Company is not the same thing. It's not Pros Holding Inc. AI Pros isn't even an American company. It's listed as one. It's not publicly traded. They're actually originally from the Philippines. Their headquarters is based out of Redwood, California. You can find them on the business registrations for Californian businesses, and you'll find that AI Pros is somewhere in Redwood, California, in a single room suite, in a single room business suite down in downtown Redwood. And as far as I know, the office is empty. It's just a shell. So as far as we know, this isn't even a real company. It doesn't exist. But they still got $5 million from Vinco Ventures because Colucci paid them. So we're going to find out why they paid them. They also paid them during the court proceedings. So they did this to evacuate $5 million just while the court proceedings were going forward. After Colucci had already signed an agreement that he would not spend anything more than $100,000. It's just stupid. And then he just blows $5 million and sends it overseas to a company no one has even heard of before. They did have a prior agreement in their filings. You can find the 8K filings of Vinco announcing that they would be working with AI Pros and that they had entered into a non-binding definitive agreement as a vendor, but nothing came of it. And shortly thereafter, they opened up Cryptide, and that's what got everyone's attention. But AI Pros is a much bigger fish than we think it is. It's probably a shell corporation that's just part of big money laundering. So each counsel and other executing stipulation on behalf of any of the settling parties warrants that each person has the authority to do so. Okay. Well, here we go. I'm seeing 2 blank signatures, but as I understand it, these are being signed in process. I also noticed that Ross Miller, CEO of Vinco Ventures, appears under ZVV Media Partners LLC. So now he's working with the Zash team directly in an official capacity. Here's Colucci's signature. Fucking tool. What was the AdRiser acquisition? AdRiser is split between Vinco and Zash. They both own they own it jointly, as I understand it. Okay, here's the long list of signatures. Okay, so here's the exact results of everything. So John Colucci is getting back pay of $46,500 plus 3 months severance of $62,500 and a prorated board fee of $26,500. So in total, he's getting $135,000, which honestly is not a lot. It's actually not that much. Compared to what these guys were expecting to be paid and what their contracts showed, these guys did not get a lot. Phil Jones is getting even less. He's just getting severance. He's not getting salary or back pay. He'll probably be paid on contract basis until they basically evacuate all of the knowledge out of his head on everything that financially happened between Vinco and AI Pros. DeStasio is getting some board fees. Goldstein is being forced to settle out of his stock and options in Vinco. And prorated board fees. So, okay. Okay, Baker Hostler is taking $100,000 for legal services rendered to the audit committee, and Howard and Howard are getting $60,000 for services related to the Howard and Howard investigation. That's interesting. I've not heard of them. I'm going to go look this company up. I want to know more about them. I'm taking a note on them. Okay, duly noted. Status of King and Farnsworth, they are going to be jointly operating on the board of Zash Global Media and the ZVV Partners LLC. So Ross Miller is taking over as the CEO for Vinco Ventures, but Ross Miller is also sitting on the board now for ZVV Partners. He's actually become a partner. Yeah, Colucci. This is a good point. So Brown Noise pointed out in the Discord chat that Colucci can't go to jail, but when he's forced to admit his participation, or at the very least incompetence regarding AI Pros, his future corporate career will be ever so slightly limited. Oh shit! I think I'm losing my voice. Well, anyway, yeah, that pretty much spells it out. Colucci's career is decimated. He will never work in the business world again after this. I hope that this follows him forever. I will go forward seeking out anywhere that this dude works just so that I can send a letter to his boss to let him know, hey, just so you know, in case nobody else said anything to you, this guy helped launder $5 million out of this company he used to work for. So be very fucking careful which keys and which offices you let this guy in alone.
Hey, True Demon.
Yeah, what's
I
up?
gotta say, a lot of people will like that. There's a lot of people in this world that's exactly who they're looking for.
You're probably right. Maybe that's a bit cynical, but you're probably right. Well, that's it for the legal documentation. I'm going to conclude with a quick review of Vinco's chart, and then we're going to close out the stream. It's almost 2 o'clock here where I'm at, so I'm gonna be very quick here. The chart has not changed all that much. You'll notice that I still have several bull flags drawn out as expected based on most recent price action. I'll just go ahead and redraw them to clean them up a little bit because they do look a little bit ugly, to be honest with you. But we had this nice move to the upside. We consolidated downward. I would say that this was, what would you say this is, 68 retracement there, JRuff? 78 retracement. So we hit 78 retracement level, and now we've returned to the previous high. And what I expect is for us to form a harmonic pattern when we bounce off of the 61 retracement level. So if we make a quick return to the 91, 92 cent level, then this will complete a harmonic pattern. And I know that like people don't like to see these moves, but in this case, this would be a very bullish harmonic. I believe that this would be a crab pattern, if I'm not mistaken. I'll see if I can turn on my harmonics patterns and see how close I am. It may not read it yet because it hasn't really completed. But if we get a retracement back down to the 92 level, then it will complete. All right. Well, doesn't look like we're going to see it complete yet. But anyway, point is that we have several layers of support, and we are now going to need to retest this one right here. So if we do end up getting a bounce off of the 95 level, then that is extremely bullish. And even if we don't, we still have another leg of support down here, all the way down to 88 cents. So if Vinco or BBIG returns to that level, even as far down as 88 cents or 89 cents, then this will still meet a harmonic pattern, and we would expect to see the price retest the upper edge of this descending channel, which is actually, if I remember drawing this correctly, this is a descending wedge. Yes. Follow the green lines, you'll see this is a descending wedge. We've got a lot of garbage thrown up here on the charts for right now, but I'm pretty excited for Vinco. Now we can actually see what the company can do now that their leadership is back in charge and that we don't have a bunch of inside saboteurs walking around just making a mess and setting fires everywhere. He'll be working for Susquehanna within a week. There's not enough vigilantes in the world. Have I ever said that? Have I ever let anybody know that that's how I feel? I feel like we need more vigilantes. Like, we need more Batmen, but they need to have more lethal weapons, you know? We need more Batmen. That would go a long way. I think the police and the SEC are downright useless. All right. So, just double checking on the YouTube chat. Thank you guys so much for joining, by the way. Quick diamond play recap on Revlon or Excella. I recapped Revlon. I'll go ahead and touch on Excella really quickly, and then I really do need to go. All right, so this is the last one. I'm cutting it off here. So Excella has been trading in a really bearish channel for a long time, and this is far less than ideal. The latest trend shows that Excella is basically now it's starting to show the initial signs of a potential reversal, but it's still trading in a bear pennant. As long as it's maintaining this new support and establishing higher lows, then this can be a good sign for the stock. But as it currently stands with its price where it is, it's not in good financial shape. They need to get their earnings profitable. So this is the main thing to look for if we're to expect that Excella is going to make a recovery. They put 2 back-to-back absolutely awful earnings. There was a negative $1.40 surprise in Q1, and then Q2 they posted a $2 earnings per share loss. That's awful. It's actually a negative $3.22, but it was a negative $2 surprise. That's a terrible earnings report. So Excella needs to get its shit right quickly. And honestly, I would love to see somebody who actually gives a damn take control from Parchada, buy him out of his seat, and get him the fuck out because he doesn't have a clue what he's doing. This dude has no idea what he's doing. If he dilutes this stock anymore, it's going to go down to a freaking float of 100. And he'll still try to sell it. I'm sorry if I'm a little bit frustrated, a little bit mad, but Parchada is an idiot. I'm particularly nasty with him because he made me look like an idiot by trying to send a hidden message and be cute. Tell me that he and sent a filing that he was buying 666,666 shares, and then promptly put in a reverse split that didn't need to happen. Fucking moron. Dude makes me so mad. Anyway, as far as the technicals go, like I said, we've got higher lows here and here. We have a double bottom here, and we have a double bottom here. So we're starting to see completion, and we just now broke above a previous level of resistance. So if we can maintain this level, that's ideal. If we retrace and get another leg up, that's also fine. That would form an inverse head and shoulders on this chart. So if we do end up seeing something like this, where we break this bear pennant to the upside, that's really ideal. Otherwise, there's really no telling how much lower this thing can go. And for all we know, they may just end up reverse splitting again. If this breaks down below here, then expect to see 40 cents within a couple of months. We're still in a bear market, so that is an unfortunate fact of the market. We are in a bear market, and this stock is not like it is no different than any others. Everything is selling off right now, so Excella is probably going to suffer just as much unless they turn around their financial situation very quickly. And the only thing really going for them is that they are getting rid of their debt. So that is one thing that they are doing right, is they are starting to eat away at their debt. If they get out of their debt, if they can reduce this down from 1.3 billion, if they can get this down to something like a healthy number like 500 million or less, then that would be fantastic. They need to get rid of this debt. Once they get to that point, then we can start seeing some improvement in their book value. But as it currently stands, their book value is still very much negative. We need to see book value positive of at least 10 before we start to see Accela really start to get priced appropriately for where it should be trading at. The one other thing that I will say is that the company is, it has a good business model, and it is ideal for the current situation that our economy is in. If this company ends up surviving, then I think that they will do very well in the future, and they will end up working with some of the largest banks and firms in business and finance. So that's going to be it. I'm going to close everything down here. And thank you guys so much for hanging out. I really appreciate seeing everybody joining in for the stream. It was really cool to be able to get to do this again. I've missed getting to do this. But that's going to be it for today. I'm going to go ahead and play a quick ad and close out the stream. You don't have to watch it if you don't want to, but it is appreciated just to help out the YouTube algorithm and the channel. And if you wouldn't mind, on your way out, just dropping a like and leaving a comment on the video if you would be so kind. Thanks again, everybody. I'll see you all tomorrow. Have a hell of a time in the markets.